Hey guys, it's your tax BFF, and I want to know, do you know how to write off your business expenses? Let me know in the comments below. Check this video out. So my eyebrows not arched, my nail, I broke two of them messing with Penny today, but we are in this thing. Of course, we got, Trump org just went under for some tax fraud. I love a good current event to talk about, just to kind of relate it to what's going on with us and our small businesses. I want to really dive into some of your everyday activities, some stuff that you are already doing and you probably may already be writing it off, but you're doing it improperly. So just kind of making sure that we got our ducks in a row, that we are aligning what we want to save on taxes with how the IRS wants it presented to them. That's the whole part that we're going to be talking about. I want to focus on three main things: travel, business meals, and business vehicles. I get a ton of questions about these three. I get a ton of people who write off a lot of expenses with this type of stuff, but in the event of an audit, they stuck. So I just we can wait on a few more people just to jump in, but I like to hit it, quit it, get out of here. I post later. You can always share, like, and review it later. So let's start with travel, because this is the one. It was a viral video a few months ago. They were talking about having an advisory board and basically taking this lavish girls trip and saying this for your advisory board. Well, a couple things are true. You absolutely can have an advisory board. You absolutely can take quarterly trips with this advisory board, pay for it in full through the business, within reason. So again, I'm always talking about within reason because you got to make it make sense. If you are, a clothing designer and you make t-shirts at this point, right? Does it make sense that you had to take your girls to Bali to discuss, your quarter one earnings? Not really. However, make sure that you have some meeting minutes. Make sure that you are sending them something in advance to plan it out, that you're having an agenda. You are putting all of them on an email list saying, these are the dates. This is what we're going to discuss. One major thing with travel, when it comes to, especially when you try to build in your holidays with your families or your birthday trips and things of that nature into your business, you have to make sure that what you are pre-planning makes sense on an overnight. Meaning, you can't just set up one meeting with, one person in your industry for 1 hour and then have an all expense paid weekend long trip with your family. Now, if whatever business you're handling in that particular state, country, whatever, is something that could not be handled during normal business hours in a normal day, then absolutely write off that hotel, write off to and from flights, write off the meals, everything that took place during that trip. Okay. But the IRS grants basically permission to do so with being proactive. Meaning that you can't say, oh, I'm making this, all my girls, we all going to Hawaii for my birthday. And then after you book the trip and make all the accommodations, then you say, you know what? So I can write this off, I'm going to make sure that I meet with somebody in Hawaii that also does clothing. It doesn't work like that. However, if you already know my birthday's in October, right? And I'm going to DC in October for my birthday. Before I book anything, I'm going to set some things up and align that trip with my business. So if it's a couple coffee dates, if it is a networking event, if it is you scouting out potential locations, whatever it is, you want to pre-plan for it in advance. And you want to make sure that that planning is documented. So you can't say, oh, IRS, no, for real, I was really thinking about going on that business trip before it was my birthday. No, you have to make some emails. Shoot out some emails, get some confirmations, work around the person that you're emailing schedule. Allow them to tell you that your birthday dates are the ones in question and the ones that they really want to be involved in. Make sure that you are choosing conferences that are 1 or 2 days during that time period. Make sure that an overnight makes sense. And then take your whole family. Boom. Travel paid for by the business, reducing your tax liability, and fully audit proof. Keep it moving. Meals. So, the Tax Cuts and Jobs Act of 2018, where President Trump put a lot of stuff in order that really sucked for the middle class. And one of those things is we used to be able to write off meals and entertainment, meaning that if you took a client to a Pistons game or you took your staff out to a play or something like that, you could write all of that off. You could write off the expenses of entertaining potential clients, making sure that your staff is taken care of, right, and happy. You are no longer able to do that. Now, one of the things for 2021 and 2022 that is huge is that meals are 100% deductible. These are meals that are at a restaurant. So let's back it up. Number one, entertainment is no longer able to be written off. So if you have a meals and entertainment budget, you want to make sure that that does not include any, activities like lodging or Pistons games, sporting events, things of that nature. You want to make sure that if you're writing off anything, it is showing a restaurant. That is through 2025. So we'll revisit there. But 2018 through 2025, you cannot write that off. So make sure that your ducks are in order when you start to write off and categorize your expenses for tax season. Go ahead and take that off. Now, I said restaurants only. If your DoorDash and the Uber Eats and all of that stuff is going to show DoorDash and Uber Eats on your bank statement. That is technically a meal. However, it is not at a restaurant, meaning that 100% deductible expense is not for that expense. You want to make sure that if you are going to be writing off any portion of these meals for business purposes, that you actually go to that restaurant. Okay? You want the restaurant name to show up on your business bank account. I know it's like, ooh, wait. But one thing, we got a couple more weeks before tax season closes out and we're prepping for 2022's tax season. Meals. Go talk to a client. Go take somebody out for dinner and discuss, work. Treat your staff to a Christmas dinner. Do those things and let's write it off. Okay? Looking for some last minute expenses, that's one. 100% dollar for dollar deductible. So reduce that tax liability by just eating out. Now, 3, this is the one that I kind of want to spend a little bit of time on because, y'all asking me questions about this. I'll be like, either people are rolling in dough or they just like to ride in style, but business vehicle. Number 1, if you think you about to write that lease payment off, honey, you better have more than one car. I don't know what's wrong with y'all. That car has to be 100% a business vehicle. So for the people who own, box trucks or fleets of cars and all that stuff, or Toro and all that good stuff, yeah, you're in a different boat. I'm not talking to you in particular. But you individuals, especially like my people in real estate, who do a ton of driving, and it is pretty necessary for you to show up with something that is of newer quality at least. Nobody wants to buy a house from someone driving, a Neon or Pinto. I don't even know if they make these things anymore, but I just don't want to see it. Like, are you not selling? Do you not know how to negotiate? So that field, it's understandable that you have a nicer car. However, You can't write off that entire vehicle just because you drive a lot with that vehicle, unless you have multiple. So if a vehicle is 100% for the business, meaning that you at least got another one to say it's for personal, then you then can write off everything associated with that vehicle. You can depreciate each year. You can write off your lease payments. You can write off any repairs and maintenance, oil changes, gas, you write it all off. Okay? It's a business vehicle. It is necessary to carry out your business. You need this car. Now, if it is your only vehicle, business mileage is one of the easier things to track. One, because there are a number of free apps where you can just push start when you leave your house, stop when you get to your destination, and it will track all of the mileage throughout the year. The only thing that you would have to do and provide to the IRS is what were you doing? And just use a real estate for an example, because you guys go to a bunch of showings, you meet a bunch of clients, you do scouting of areas to look for potential properties, right? All of that can be documented as business mileage. And it's 56 cents to the mile. So just you keeping an up-to-date record of where you're going and how many miles you drove, you're reducing your tax liability by so much. Why are you not doing this? I don't understand. But it says, but does the vehicle have to be, great question on Facebook. The vehicle does not need to be in your business name. Okay? Now, if the business name is on the vehicle and you are building business credit, this is a whole other stage and level of what will be great for you in the long run, but it's not necessary for the IRS. Okay, so I hope that answered your question. But moving on, regardless if it's in your name or not, just make sure that you're documenting where you're going and what you're using it for. So even if you do have multiple vehicles, if you have your business vehicle and you are using it 100% for business, what do you need it for? Okay. So I am an accountant. Do I need a car to be an accountant? No. 2020 showed me I don't really even need a whole building if I don't want to. Okay. So make it make sense. Make sure that you are documenting what you're using this vehicle for, how many miles you are using it for, and always be able to show that any expense on your tax return is there because it is going to help you make more money. So you're showing the IRS that I spent this money to make this money. Again, if you have a business vehicle, especially one that you say is 100% for the business, can you have some revenue? Did you buy this vehicle before you were even, banking any money in sales? Does it make sense that you invested this, large sum of money for this vehicle and you don't even know if you're going to be able to make the money back? You got to make it make sense. Another thing, if it is used, for instance, if you're a contractor and you go to an office every day, the IRS frowns upon you knowing that you got to go back and forth to this office and taking that job as a contractor. So you want to make sure that your business vehicle mileage is for going to multiple locations, going to see clients, going various different places. You don't want to have a report with, 5 days in a row going 20 miles every single day for, the entire year. They'll throw that out. You want to make sure that you are going, like I said, to visit a new client, to go to a new office. Maybe you're a contractor, but you work at multiple locations. Then we can write that off. You want to keep track of it and make sure that we know what it's used for. So the free apps that I was telling you about will absolutely keep track of the mileage for you and generate a report that would be sufficient for the IRS. But now we have to go in and just make sure that we make sense out of each one of those miles. I am taking new clients for tax season. So yes, so you want to, everything you do, document it. I talk about organization, I talk about your accounting system, I talk about business bank accounts so often because it is the number one thing that will save you so much money in taxes and will cover your butt in the event of an audit. So I don't know if you all joined me last week, but I talked about how audits they're not supposed to be this scary thing, right? Because you got all your ducks in a row and we're just going to be presenting the information and we put on that return. But the IRS know they're getting something. The IRS is checking to get some money, okay? Period. They are like, you know what, run this one. Run that one right there who paid me $314 in taxes, but they grossed $100,000. They wrote off way too much. I want to see and substantiate each one of those expenses. Now, if you present everything that I'm telling you to present, you present your records, you present the clients that you went to go see, you present that it was necessary to see them this many times in order to make the money that you made, you present that this business vehicle is one of 3 of your personal vehicles and this one is used totally for the business in order to see clients, you present to them that you made travel reservations after securing a deal with an out-of-state client. Honey, if anything, they'll have a little penalty for you, or they'll try to waive something that maybe you didn't document all the way properly, but it will be pennies to the dollar, and you will not be in any way, shape, or form affected by that audit. Now, you get audited and you don't have nothing. You don't even got no business bank account. You up here trying to tell the IRS that this personal statement, this is personal, but this is business. Just get that checkbook out. Get it on out and be ready for them to check for you again. Okay? Because that's another thing. Once you get audited, the IRS documents how you showed up for yourself. They say, okay, no, this person got their stuff in order. Or they say, oh, you know what? I'm watching this. And I might have to audit them again. And just know that in the event that you ever think you're going to get a refund and you didn't even pass the last audit, oh, let's audit that one again. So they say audits are, random and whatever. Listen, the statistics definitely show that they are targeting a very specific number of people. More than 60% of their audits are on small businesses making $75,000 or less. So it's very strategic what they are doing. You just have to make sure that you are armored and ready against whatever they are pulling. Number one, they're not going after big businesses because big businesses like Trump, which we'll talk about in a second, got layers and layers and tax attorneys and all types of stuff in order to inundate the IRS that's already short-staffed. We, however, I ain't even got time to put all this stuff together, even if I have it, right? I definitely don't have the money to pay anybody to put all my receipts in order and make sure that everything is presented to them in the proper way that the IRS wants to see it. Because what they don't want to see is just a tub of receipts. They're not going through that. Half of them you barely can even read anymore. Get ready to pay. Just go ahead, get the checkbook out. Okay. So you want to make sure that everything you have is hopefully in some type of accounting software, but if not, at least on a spreadsheet with an explanation. You want to make sure that any receipts that you have, you got them electronically somewhere. Start an electronic file. Now, my online portal my clients have access to, they can upload stuff throughout the year. So they don't have to wait until tax time in order to get me everything. They have already started to put things in their 2022 folder. They've labeled it business supplies so that we know this is where we go during tax time in order to get their supply number. But we also know that we have the backup in the event that we ever need it. Make sure that you are doing something. QuickBooks, you see the transaction, and before you categorize it or reconcile your accounts, you take a picture of that receipt and you throw it away. It's in QuickBooks attached to the transaction. It's so easy, so simple. It will save you so much money. Now back to the personal versus business. If you are still doing business out of your personal account, welcome to my channel. Welcome. I will fuss at you all the time. The IRS will look at your expenses and they'll see it right next to your mortgage. They'll see it right next to your kids' daycare. They'll see it right next to all of these personal expenses and they'll say, let's throw it all out. It all looks personal. And then you go tell the IRS that, no, for real, no, this time I went to Target, it was for show for the business, like for real. I know I bought tissue, but it was for the office, I promise. Make it make sense? You can't. So you might as well just get to, writing that check. Just know that you are shooting yourself in the foot in so many ways if you are still using your personal account for business activities. And this is for anyone making over $600. If you're making under $600 with your business, it might not be a business just yet, and you might just want to pump the brakes and I wouldn't even get no bank account yet. But once you start making at least $600, which could be, one transaction for a lot of folks, you want to make sure that that is done on your business bank account. And anything, say for instance, you forget your business card and you are at Target. You want to make sure that you swipe your personal card, but then your business transfers that amount into that account. And you want to show that that transaction was paying off something that was paid on your personal account. So you want to show and paint the picture in your bank statement to the IRS that you loaned yourself the money because you made a mistake and you repaid yourself through the business. Okay. Can you speak about the proper way to pay folks you like? Oh, so Quan on Facebook. Next week, I am going to be talking exclusively about contractors, employees, how to pay them, if you need a payroll system, how to keep track of everything, employment taxes, paying yourself, everything. So that's another big topic. So definitely join me next Wednesday, Quan. We're going to talk really in depth about that question. Before we leave tonight, I love current events, and I love when it's tax related. It's like the nerd in me is like, oh, let's read the entire tax fraud case. But Trump Org found guilty. Just so I can, give you some bite-sized bits of that headline that came out yesterday. The Trump Organization is made up of about 500 business entities. 2 of those business entities were found guilty on 17 counts of tax fraud. Okay? Y'all do the math, 2 out of 500. So a lot of y'all already like, why Trump ain't going down? Well, let's back it on up. I read the case. The CFO of one of those entities actually was falsely claiming tuition reimbursement on his payroll. So he was getting money from the organization to pay for his family members to go to school, which could have been an employee benefit had it been outlined, but he's the CFO. He should have done things a lot more properly than what he did. He just increased his pay, said it was tuition reimbursement for what was supposed to be for himself and start paying for all his family's schooling. It benefited him. He signed off on it. There are records that show what he was doing and how he was doing it. That does not involve Trump. It unfortunately happened under his organizations, which there are so many layers. Even if it did slightly involve Trump, it's so many layers. He's the owner. Okay? There's chairmen, there's presidents, there's CEOs, there's CFOs. There's so many layers of people that are in place in order to make decisions that he's so far removed from so much stuff in his business that he can get away with one of his organizations committing tax fraud. And he has a C-level exec who was the signing officer on these transactions who is going down. The IRS, the feds, they just need somebody to take the fall for this, right? And while, Trump's haters would love to see him go down for it, this was one of those cases where he was untouchable. Now, do want to talk about it on a level that we could relate to, though. If, for instance, one of the things that you can write off in your business are employee benefits. You can write off, that you are part of somebody's benefit package, that you pay for their daycare, that you pay for tuition reimbursement, that you contribute to an IRA or some type of pension. There are limits and thresholds to everything. So make sure that you're doing it within reason, and also make sure that you always know that, Quan, going back to you, employee versus contractor, these are only employee benefits. These are not anybody who works underneath your umbrella benefits. These are employee benefits. So you must be paying some employment taxes for that person and giving them W-2s at the end of the year, even if that person is yourself. I just had a newer client, I think it was just yesterday, who was claiming that he was putting pension contributions into his own account of north of $50,000. So a CPA who is, supposed to be educated and on top of tax law told him that he had a $61,000 threshold. Let's back that on up. Well, there are thresholds for employee pension deposits, but they are for all employees, not including you. For you as the business owner, you got $20,500 plus an additional $6,500 that you could say was pulled out of your W-2 employment wages. That's $27,000. So him being $23,000 over that threshold has a tax penalty. Of course he didn't know. Of course he was taking the advisement of his CPA who, probably threw a couple of tax laws at him that he didn't read in full. And in the event that he is audited, he cannot use that. He cannot be like, well, I ain't know. I thought I could do that. That's why I'm here, guys. So I am here so that you never have to say, I didn't know I could do that, and then the IRS doesn't accept it. That is not one of the acceptable things that they will take from you in order to reduce your penalty. You can say, the IRS gave you bad information. You better have that person's ID number and the date that you called. You could say that there was a death in the family. COVID was a big thing that helped a lot of people get out of penalties and late filing penalties and things of that nature. It has to be, I believe they have about 7 that are accepted. And we talked about this last week too, but the IRM is the IRS's internal handbook. It is online. This is what all IRS agents use. And they have the acceptable reasons why they can waive a penalty or, get rid of a fee that is on your account. I don't know, or my tax person told me it's just not acceptable. So you want to do your due diligence. So I had a question too earlier. They were asking, this was on TikTok, I'm everywhere, y'all. It was on TikTok, but they asked, did I recommend learning accounting on your own as a business owner? And I know they probably thought I was going to be like, no, you need to hire me. Absolutely, you need to know accounting in some form. Now, of course, you don't need to know all the tax laws. You don't need to know, formulas and all of that good stuff. But even if you do hire an accountant, you need to know how to keep them accountable. You need to know what you're supposed to be looking out for, what questions to ask. You need to be able to understand how you are making money and how to make more. If you ever want to scale and grow a business, you want to make sure that you are doing so in a way that makes sense and you follow the money. You don't follow trends. You don't repeat what somebody else has already done. You don't steal somebody else's tactics. You look at your numbers. Who are you resonating with? What type of clients come to you the most? Who's spending the most money with you? How can you raise your prices? How can you retain your clients and make them repeat clients? Those are the things that the numbers tell you. Every marketing dollar that you spend should come from you obtaining data that showed that this number of people came from this medium already. Why would you spend, all of your advertising dollars on this new medium that you've never even been in? Because you think you're going to reach new clients? Oh, that's so cute. So cute. It's so silly. Reach the people that are reaching out to you first and then expand. But I'm going off topic. I wanted to really bring in the things that you do on a regular basis already. You already travel. You already eat out. You already use your vehicle to go back and forth to places. Now let's properly document them so we can write them off and save on taxes. In a nutshell. So next week we will have our final audit proof series. We will be talking about employees and contractors. We'll be talking about how to pay people, how to pay yourself, how to document it, what documents you're going to need to provide the IRS to your contractors and employees, when you need to file, all of that good stuff. So definitely join me next Wednesday. I tried to make this at 2 p.m. My daughter said, nah, she was good on that. So we kept it at 8 after she goes down. So we'll do it next week too. Next Wednesday, 8 p.m. Join me. Thank you all for joining me today. I will post them on my page. So like, share, comment. Let me know if you have any questions. And let's get prepared and get our documents in order for tax season. Because I'm going to always say, you can present the numbers to me, but in the event that you're audited, you're going to have this. Are you going to be ready? All right. Everybody have a good night. Talk to you all soon, hopefully.